Welcome to the deep dive. Today, we're getting into ST Engineering's 2024 performance. We're using their annual report as our guide.
That's right. Think of it as unpacking the year, what drove their result, what the numbers really mean.
Exactly. We want to understand the businesses, the financials, and, their plans for shareholder value.
It's about getting behind those headline figures. And speaking of figures,
Yeah, they were pretty impressive, weren't they? A record order book, first off, $28.5 billion. That's up 4% from 2023.
a solid base. And revenue saw a big jump too.
It did, $11.3 billion, which is what, 12% higher than the year before?
Correct, $10.1 billion in 2023. And that growth flows through to profitability.
Right. EBITDA, that's earnings before interest, taxes, depreciation, and amortization, was up 11% to over $1.6 billion.
$1,614.3 million, yeah. A key indicator of operating health.
And profit before tax surged 23%, hitting $862.7 million.
It's led to a net profit of $702.3 million, up a solid 20%.
And that means earnings per share also climbed 20% to 22.53 cents. So overall, a very strong financial picture.
Absolutely.
Yeah.
But these numbers don't just happen, right? It's driven by their core businesses.
Let's break those down. Three main segments. First, defense and public security.
Okay.
Their revenue hit $4,252 million in 2024. That's up from $3,905 million.
Good growth there. And the second?
Commercial aerospace. Even bigger revenue, $4,935 million, compared to $4,384 million in 2023.
Another strong performance, likely helped by the air travel recovery.
It definitely seems like it.
Yeah.
And the third segment is urban solutions and SATCOM. Now, the report directs us to the operating review for the full 2024 breakdown.
Right.
But we know its 2023 revenue was $1,944 million. We'll dig into its 2024 performance later, especially that turnaround.
Okay. So the mission for us today is really to understand what's behind these numbers in each segment, the strategies they're using, and what it signals for the future.
Exactly. Let's start with defense and public security. Geopolitics seems like a big theme here.
Oh, absolutely. The report is pretty direct about it. Ongoing global tensions are, well, creating sustained demand for their core defense offerings.
Yeah. But it's not just about traditional stuff, is it? They mentioned technology and sustainable growth.
Precisely. Their strategy isn't just reacting. It's about focusing on tech advancements and being smart about which markets they pursue. They're really leaning into their strengths,
right?
Ammunition, land platforms, naval systems.
And that Kazakhstan deal fits into this, right? The armored vehicles.
It does, yeah. Partnering with Kazakhstan Paramount Engineering for local production of those 8x8s that shows their global reach is expanding. It's not just selling, it's embedding themselves in country.
Build stronger ties, I imagine.
Definitely. And securing those NATO standard 155mm ammunition contracts with new European customers. That's significant too, given the current demand. Shows they're competitive.
And their role within Singapore's own defense setup must be a huge advantage.
It's fundamental. They're a strategic partner, constantly pushing the tech envelope to keep Singapore's forces ready. Think about the new platforms they're developing.
Like the Terex S5.
Exactly. The infantry fighting vehicle. It even has a hybrid electric drive option, AI features. It's pretty advanced stuff.
And the unmanned ground vehicle, the Taurus.
Yeah, the Taurus multi-role UGV, fully electric, even has regenerative charging. These aren't just tweaks, they're significant steps forward in military tech.
Sounds like it. Did they mention new weapons too?
They did. A new 40mm automatic grenade launcher, the low-velocity one, and a new generation assault rifle. Shows ongoing work in soldier systems.
And the public security side, that partnership with HTX.
Right, the Home Team Science and Technology Agency. They've expanded that partnership. A really tangible outcome is the delivery of over 250 next-gen fast response cars to the Singapore police.
The NGFRCs, yeah. What's special about them?
They're packed with smart tech, automated number plate recognition, integrated dashboard, RFID tracking, in-vehicle video. A major upgrade for policing.
So defense and public security is really focusing on tech, AI, unmanned systems, cyber.
That's the clear direction, yes. Adapting to modern threats and opportunities.
Okay, let's switch gears to commercial aerospace, another segment showing strong growth. What's the story there?
Well, a big part is expanding their solutions, introducing new OEM products. But a key driver was definitely increased production volume, particularly in nacelles and composites.
Nacelles, the engine housings.
Exactly. Airbus ramping up production of the A320neo is a major factor there. Plus, there's healthy demand for spare parts in the aftermarket.
And they seem to be aiming for more integrated services, that EFW approval.
Ah, yes, the ESA CAMO approval for EFW. That's quite important. CAMO is Continuing Airworthiness Management Organization.
Right.
It means they can now offer end-to-end services design, conversion, maintenance, managing the airworthiness. It makes them a more complete solution provider.
And the big engine contract with Casa Air.
That's another significant win. An exclusive 15-year MRO deal for their AAP-1B engines really cements their capability in engine maintenance.
With air travel picking up, I assume their MRO facilities are busy.
Very much so. The report mentions healthy utilization rates. And it's not just MRO. Their aviation asset management business is also booming.
How big has that gotten?
Over US $2.3 billion in assets under management now. They're delivering converted freighters, new engines to airlines like TUI, Skyvision, Cebu Pacific. Demand for current-gen assets is strong, too.
So the outlook looks pretty good, but are there challenges?
Oh, definitely. They expect OE manufacturing and MRO to keep growing with air travel, but they do see freighter conversions kind of normalizing, maybe cooling off a bit from the recent highs.
And the industry-wide issues? Supply chains? Labor?
Still very much present. Ongoing supply chain headaches and that persistent shortage of skilled technicians are challenges they and the whole industry are facing.
How are they addressing that?
They're expanding capacity, new MRO facilities coming online in Asia and the U.S. from 2025, and they're really focused on the talent pipeline.
Partnerships with schools, training programs.
Exactly. Collaborated with technical institutes, running development programs, plus they're investing heavily in deepening their capabilities for new-gen aircraft and engines.
Like the LEP engines you mentioned.
Right. Getting the infrastructure ready for LEP-1A and Megas 1B services starting in 2025, and pursuing more approvals for airframe MRO. They're also leveraging tech like AI and 5G for Singapore's defense aviation needs too.
Okay, let's move to the third segment. Urban Solutions and SATCOM. Seems like a bit of a mixed bag here.
That's fair. The smart city side, especially smart mobility, looks really strong. Continued growth, expanding globally.
They listed some big rail contracts, didn't they?
They did. Key wins in Bangkok, Queensland, and Australia using their AGIL passenger information system, Taipei, Kaohsiung in Taiwan, and multiple lines here in Singapore. Cross Island, Jurong region, upgrades on north, south, east, west.
That's a lot of metro work. What's driving that demand?
It's the big trends. Urbanization, the need for safer cities, and the push for sustainable development. People need to move efficiently and safely.
And it's not just transport, right? They mentioned other smart city projects.
Correct. Things like a smart water platform in Brazil for Asia, and that comprehensive smart city platform for Lusail City in Qatar, using AI and data to manage the city.
What about Transcore, the U.S. tolling company they acquired? Is that paying off?
It seems to be gaining momentum. Good traction in the U.S., plus they landed their first Southeast Asian tolling contract. Suggests those acquisition synergies are starting to show.
So the focus is on tech leadership, AI, Gen AI.
Very much so. Integrating those into their next-gen solutions. Look at the AGIL Drive Safe Plus system for buses here with SBS Transit.
Using AI for collision warnings?
Exactly. 360-degree detection. And then you have SBTEL partnering with MAS on quantum safe networks for finance. That's pretty cutting-edge stuff.
Okay, but then there's the SATCOM part of this segment. The report sounded more cautious there.
It did. They acknowledged challenges. There were encouraging signs, apparently, in Q4 2024, but they were clear.
Yeah.
More work is needed for a full turnaround.
It's a tough market, SATCOM.
Incredibly dynamic, yeah. They're aiming to benefit from new tech and strategies. A key move is investing in intuition. It's their next-gen ground system. Cloud-native, software-defined, designed for multi-orbit satellites. It's a big tech upgrade aimed at making them more competitive.
Got it. Before we dive into the financials proper, let's touch on their overall approach to technology and innovation. It sounds quite coordinated.
It does. They have a group technology office and a group engineering center driving synergy, guiding the R&D investments across the board.
And they're investing in critical digital tech.
Yeah, the list is what you'd expect. AI, data analytics, robotics, cyber, 5G, generative AI, even quantum computing. They're building reusable modules, too, like an AI video analytics suite. Saves time and money.
And their AI work is getting noticed.
Apparently so. Presentations at international conferences, which is always a good sign. They're also strengthening ties with universities, using AI for things like traffic prediction.
And cybersecurity is obviously key.
Crucial, especially defending against AI-driven attacks. They're developing AI tools for threat detection and response. They even highlighted specific AI products. AGL Genie Studio, a no-code AI platform. AIC Waymo for securing operational tech. And AGL Trust for detecting deepfakes.
So innovation is clearly a major pillar, and overall contract wins looked huge for 2024.
Very strong. Across the three segments, they pulled in $12.6 billion in new contracts. $4.7 billion for commercial aerospace, $5.3 billion for defense and public security, and $2.6 billion for urban solutions and SATCOM.
That feeds directly into that record order book and R&D spending.
Just under $190 million for 2024, $189.8 million, showing that commitment to future tech.
Okay, let's pivot fully to the key financial highlights now. We saw the headline growth figures. What really drove that strong bottom line performance?
Well, the report puts it down to disciplined approach and effective execution of our order book. It's not just winning work, it's delivering it profitably.
Okay, so defense and public security EBIT was up 19% to $400.2 million. Solid growth.
And commercial aerospace?
It's also strong. Up 12% to $636.4 million. That's the biggest contributor in absolute terms. But the big story seems to be urban solutions and SATCOM.
Absolutely. It reported an EBIT of $12 million in 2024. Now, that might not sound huge.
Until you compare it to 2023.
Exactly. In 2023, that segment had an EBIT loss of $129.4 million. So smoothing from a significant loss to a profit, even a modest one, is a major turnaround.
Wow, that really puts it in perspective. So the overall strong financials are a mix of good execution, those big contract wins, market growth, and this initial turnaround in urban SATCOM.
That sums it up well. And looking at the 5-year trend on their income statement, it's pretty consistently upward. Revenue, EBITDA, EBIT, net profit, all showing solid growth since 2020.
What about the balance sheet? Any key changes there?
Total assets grew to $16.2 billion, up from $15.4 billion. That's driven by things you'd expect with more business, more receivables, contract assets, inventory. Interestingly, average capital employed dipped slightly, mainly because they reduced borrowings.
And cash flow. They mentioned positive operating cash flow influencing dividends.
Yeah, they didn't give one specific free cash flow number in the highlight section we're looking at, but emphasizing positive cash flow from operations is key. It shows the core business is generating cash, which is fundamental for dividends, investment, and debt repayment.
Any key ratios they flagged for 2024?
They mentioned value added per dollar of revenue at $0.43, kind of showing the wealth created, and net tangible assets per share at your $1.98.
Okay, let's talk shareholder value. Dividends are always top of mind for investors.
Understandably. So the board proposed a final dividend of 5 cents per share for 2024.
Okay.
If shareholders approve that, the total for the year will be 17 cents per share.
Which is up from last year, right?
It is up from 16 cents in FY 2023. So a modest increase, but an increase nonetheless. They calculated the yield at 3.97%.
And their overall approach seems balanced. Dividends, growth investment, debt reduction.
That's the message. They stress sustainable value backed by performance and their strong balance sheet. Those IMPA and AA Plus credit ratings help underline that.
Did they give any hints about future targets?
Yes. They mentioned unveiling new 5-year targets at their Investor Day in 2025, reflecting confidence in their prospects. They also point to their track record of delivering dividends while capturing growth.
And there was something about share buybacks.
Right. They bought back about 7.9 million shares on the market during the year. They also reissued about 8 million treasury shares for their employee share plans.
So the buybacks might suggest they felt the shares were undervalued, perhaps? And the reissuance is standard for compensation plans.
That's generally how you'd interpret those actions, yes.
Okay, so assessing the business moving forward, what are the core strengths you see?
Well, that huge order book is definitely a major strength, provides visibility, consistent revenue and profit growth in key areas. Their commitment to innovation is crucial for the long term, and their diversification across different sectors helps manage risk.
But there are always risks, right? What are the potential headwinds?
For sure. Geopolitical uncertainty is a constant factor for defense. Aerospace still faces those supply chain and labor issues we talked about. And the SATCOM turnaround isn't complete yet. That still needs work and carries execution risk in a fast-changing market.
So adaptability is key.
Absolutely. Navigating those challenges while sticking to their growth plans, their R&D focus will be vital there. And, of course, continuing to deliver value to shareholders remains central.
They also mentioned winning an Investor Relations Award, which suggests they value transparency.
Yeah, the Gold Award at the Singapore Corporate Awards. That's generally seen as a positive sign for shareholder engagement. And having Temasek as a major stable shareholder helps too.
So wrapping up, it feels like 2024 was a genuinely strong year for ST Engineering. Growth across most segments, that record order book, clear strategy focused on tech and shareholder value.
I'd agree. The financials back it up. They seem well positioned despite the challenges that exist in SATCOM and the wider environment. The strategy seems clear, and they're executing on it.
Right. So here's a final thought to leave you with. With ST Engineering investing so heavily in things like AI, quantum computing, how might they actually disrupt things beyond their traditional spaces? Could we see them pop up in unexpected adjacent industries down the line? What new aha moments could their tech unlock? Definitely something to think about. Thanks for tuning in to this deep dive.